Bubenicek, from Generate Capital, working with Generate Capital, leading on the sustainable data center practice. So what that means is we're looking at all things sustainable for data centers that are financeable. Most notably, that's been on-site power generation. So that could be anything from fuel cells to gas turbines to CHP, storage, et cetera, all of those sorts of assets. Also looking heavily at the cooling side of things, and if there's something that can be done effectively where you convert what would be a CapEx sort of investment for a data center and turn it into an OpEx line. So the as-a-service model, if you will, is really what the financing about. So we provide off-balance sheet financing to data centers. Data center becomes the counterparty by way of a PPA or something along those lines, and we can finance it. Yeah, I think that's what's exciting, right? As you start seeing the technologies are finally financeable, right? And yeah, investment tax credits are a big part of that, so we see those in the US. You have some accelerated depreciation or bonus depreciation aspects that come in, relative to the environments or the markets that you're working in. And the technologies themselves are, I suppose, reaching certain economies of scale where they are penciling out from a financing perspective. So suddenly that's an exciting thing, right, in the data center world where we have to really meet quite a low price of power. Yeah, I mean, we should kind of separate the two worlds, because on one hand, every one of them or most of them are committing to going 100% renewable, right? And so what that really means is they're buying RECs or renewable energy credits on the market, right? And so that's much different than on-site power generation, which generally is coming in the form of natural gas powered sort of plants, right? Whether that be through CHP or whether that be through turbines or fuel cells. So I think what's important to note here is that on one hand you have the RECs and you're going 100% renewable, which some people may say is greenwashing because that has, not necessarily great effects on the grid and maybe not achieving sort of renewable in the truest sense. But the on-site power generation is interesting because what we're seeing is this is happening from a business sort of risk mitigation perspective, and that's relative to the grid. And I think, primarily we can't get away from the fact that underlying it's business drivers that move these things, right? I mean, there's always a corporate social responsibility aspect, and I think that's where the RECs come in a big way. But then there's the business drivers, right? And the business drivers related to the risk of relying on the grid, especially in areas where the grid is fragile or becoming increasingly fragile, right? And so what I spend a lot of time looking at is, and there's an interesting correlation here with a lot of irony, but when you have a certain degree of renewable penetration to the grid, you start seeing more and more instability, right? And we can show this link, we can point to the German grid as one very good case study. The IEA did a study on this, which I suggest you look at. You can look at PG&E in California. We're seeing the outages, we're seeing increased prices. I think PJM in the Northeast will be one to follow. You're seeing similar things in Dublin, Amsterdam, moratorium on the data center builds. So what you're seeing is this sort of impact to the grid that is causing more and more outages and higher power prices. Renewables are variable power sources, right? When I say renewables, I'm referring to wind and solar in this case. They're variable, right? Sun during the day and wind and whatever. And we haven't seen that at scale, right? So you don't really know what that looks like. In theory, in practice, we'd like to say that that's going to work. But in the meantime, right, a data center operator doesn't have the luxury of time to wait around, right? They're having growth rates, power consumption. A lot of the colo folks don't even have control over sort of what power consumption their customers may put into the racks, right? As the racks are becoming denser and denser, the servers are becoming denser and denser. So you have this sort of increase in power consumption that's going out of control. In some places, the grid is unable to handle any more from a capacity perspective. In other cases, you can look and see that because of more outages, their UPS and diesel generators are going to be running a lot more. Now, if you look at going concerns within the 10K or the annual reports of these companies, they know that regulations are coming, right? If they're not already in place, they're coming. So the idea here is the grid is becoming more fragile. The cost to operate on a fragile grid is increasing, and so what do we do to kind of get in front of this sooner than later, especially if that grid can't even handle our capacity for growth? And that's where they're turning to on-site power generation, right? And these are the sorts of assets that make a lot of sense from our perspective because, again, it's the business drivers that are driving these operators to look at this. And because they pencil out now, especially in markets where the grid is already fragile, right? We have high power prices. As we mentioned, there's a correlation there, so we can pencil them out very nicely in these markets and achieve sort of grid parity for the operators using on-site power generation, which also is increased resiliency, right? So now they move to primary power being fuel cell or turbine or whatever, and then secondary is the grid. This is, I don't have enough to really share the full context of this, but basically what we believe and what we're seeing is that hydrogen can mix into the gas supply, the same supply line, right? And so although the hydrogen supply chain or infrastructure isn't there yet, these fuel cells are built to run on hydrogen, right? The only reason they're running on natural gas is because the hydrogen supply really isn't there at scale to be able to do this. So they have a conversion kit that converts natural gas to hydrogen, and then they ultimately run on hydrogen anyway. Same with a turbine, gas turbine, right? And they can run on biofuels as well, by the way. So biofuels are hydrogen. So the idea here, and I think the way the data center operators are looking at this is a stepping stone to what will eventually be emission-free or super low emission fuel supply, right, when it moves to hydrogen. I think this is where Generate Capital comes in too, right, and I think the whole industry can get behind this, but data centers offer such tremendous scale by way of the sort of projects that are there that they could justify a co-investment into hydrogen infrastructure on the back end of contracts like this, right? So if you can sort of get the right consortium together or get the right projects together, you could justify an investment on the back end, let's say with the colo provider or whoever your partner may be, to give them some premium or some discounted price on hydrogen for the foreseeable future as a result of taking this risk with you, right? That's not greenwashing, that's a real impact right there, right? And I think that's what Generate stands for. That's why I love being a part of Generate, is that there's actual real impactful work to be done here. But it's probably not by way of RECs, right? I think we know that. It's by way of things like this. So if we can find the business cases that are already there, that pencil out, we can use that to sort of bridge our way into a hydrogen infrastructure on the back end. Now you're talking about something that has the impact.
Okay.
Yeah, just mini versions of data centers, right? So I think we're seeing them as low as like 100 kilowatts up to maybe 500 kilowatts of load. But these are highly distributed, right? And you're looking at like the compounded annual growth rate, I think they're projecting is 40% year on year for the next 6 years or something. So tremendous growth rate for these edge systems. And they seem to be following 5G, right? So the 5G rollout is happening. 5G basically opens the pipes. You need this edge compute in order to sort of handle that sort of new traffic that's coming through, et cetera. But that also means now on a distributed basis, you're going to have net increase overall, sort of power consumption in super dense ways because the similar data center sort of footprint as what you'd see in the large scale. So the idea being here is this is greenfield sort of rollout. Why not couple these with sustainable power solutions from day one, right? And that may be a large lithium-ion battery pack combined with a fuel cell, or maybe just the lithium-ion. Maybe there's a natural gas generator as the backup instead of the diesel generator, right? We're moving more and more towards, again, sustainability. I don't know that I buy into just a full leapfrog into fully renewable because, again, variable power problems. But what we're seeing in the market is a movement towards this sort of storage plus some form of generation on site, usually powered by natural gas, to complement these. So you need that starting point that's justifiable to make that initial investment, and then it can kind of incrementally scale up from that point forward.